Our issue is not demand, it is production. The frustration that we're seeing from customers is being unable to get them a car, not are they willing or interested in buying a car. Basically, I think zero about demand generation and a lot about production and engineering and supply chain.
Exactly 2 weeks ago, Tesla released their Q3 production and delivery report, which was a record amount of deliveries for Tesla by almost 10%. But it fell short of analysts' expectations for the quarter by about 5%. Since that report came out, Tesla stock has been getting destroyed, down over 22% in 2 weeks, as the combination of the delivery miss paired with an incredibly uncertain macro environment has left the stock reeling. Moving forward, the key concern for Tesla investors comes down to one major thing. Will Tesla continue to sell every vehicle that they make, or is this the imminent demand collapse that Tesla bears have been warning about for years? I believe that there are 6 reasons why, 6 demand catalysts that Tesla can pull on when necessary to continue to sell every car they make for many, many years to come. The first and most powerful catalyst is Tesla's massive pricing power and incentives. Pricing is the single most powerful generator or destroyer of demand, and no one has pricing power like Tesla does because of their industry-leading margins. Next is the new US EV tax credit, which will single-handedly ensure that Tesla can profitably sell every vehicle it makes in their largest market and the second largest vehicle market in the world, the United States. Third, we have Tesla's ability to create demand by offering new vehicle models and by entering new geographic markets. Tesla has become the behemoth that it is today on basically 2 models, the 3 and the Y, and essentially 2 markets, the US and China. So imagine what it can do once it expands its reach. The next big demand lever is the unfair advantage that EVs have over ICE vehicles when it comes to the lower cost of vehicle ownership from not having to pay for gas and the higher resale value that Teslas get in the used car market. So any individual or business that requires high usage vehicles will actually save money over the life of the vehicle by buying Teslas. Up fifth, we have Tesla's advertising advantage, which has allowed them to sell every vehicle they've made for over a decade without any money spent on traditional advertising. Lastly, we have Tesla's FSD and Robotaxis, which is essentially a lottery ticket to infinite demand for many decades to come, as it transforms what a vehicle means to the world and 5 to 10x's the value of a car. Let's dive into each of these in more detail. Up first, we have Tesla's massive pricing power and incentives.
There is a difference between value for money and fundamental affordability, because sometimes people say, well, if you got all this demand, why don't you just raise the price to some, double the price or something? And this is usually expressed by somebody who's rich. Even if you rail value for money to infinity, consumers do not have enough money to buy it. Even a product where the desirability is railed to infinity, they simply cannot buy it. So this is why you cannot just raise prices to some arbitrarily high level, because you pass the affordability boundary and then the demand falls off a cliff. We've raised our prices quite a few times. They're frankly at embarrassing levels, but we've also had a lot of supply chain and production shocks, and we've got crazy inflation. So I'm hopeful, this is not a promise or anything, but I'm hopeful that at some point we can reduce the prices a little bit.
We've just heard Elon Musk reiterate the fact that pricing is the single most powerful generator or destroyer of demand. So the question we should all be asking is, how does a company like Tesla have a demand issue when they haven't even lowered a single price in the last 2 years? And actually, they've done the complete opposite, which is raise prices significantly in every market they currently sell vehicles. We already know that Tesla has an industry-leading profit margin, which has averaged over 30+% for the last several quarters, even when regulatory credits are removed. We know that most commodity prices have already peaked and started to come down, which we can see clearly in this chart provided by ARK Invest and recent tweets from Elon Musk. We know that they are improving their operating leverage by ramping up 4 massive factories, their largest of which in Shanghai just completed upgrades last quarter, which immediately upped their output by 33%. We know that Tesla is constantly removing parts and processes from their vehicles, and that they just removed expensive ultrasonic sensors, which will have an estimated savings of over $100 per car. So tell me, how does Tesla have a demand issue when they haven't even lowered a single price? Not even a little bit. We have to remember that pricing and supply have an exponential relationship, not a linear one, meaning a 5 to 10% decrease in price could potentially double or triple demand. And if we look at the numbers that Tesla provided in their last few earnings reports, we can clearly see that Tesla's average selling price has gone up from $48,792 in Q3 of 2021 to $55,981 in their most recent Q2. And that's again without regulatory credits, which means that their average sale has increased by $7,189 or 15% in the last year alone. The fact that this hasn't destroyed their demand is astounding. We've already heard Elon say on the Q2 earnings call that he thinks their prices are at embarrassing levels, but that they've kept their prices high due to the insane order backlog they had a few months ago and the uncertainty of rising commodity prices and inflation. And now that both of those concerns are unwinding, at least as it relates to Tesla's supply chain, we should see some significant price decreases in the coming weeks and months. In China, where these concerns are most prominent, I expect Tesla to announce a price decrease sometime between their Q3 earnings call this Wednesday, October 19th, and November 1st, since November is the second month of the quarter and typically when we see more local deliveries begin in China. And the only reason Tesla hasn't made these announcements already is because Chinese buyers are very price sensitive and they don't want to upset so many local Chinese buyers who took delivery in the last 2 weeks of September. So giving that 3 to 4 week cushion can help to minimize some of that damage to consumer trust in China. What's crazy is that even though Tesla's demand concerns are the hot topic right now, Tesla will probably only have to lower prices in the immediate future in one market, and that's China. And potentially, they could get away with lowering prices on just one model in China, their best-selling standard range Model Y. The standard range Model Y makes up over 60% of their sales in China, so it's by far their highest selling model. My guess is that they are planning to drop the price on that standard range Model Y by about $2,500 US. If they make that $2,500 price drop, that actually gets them under the price threshold to qualify for China's current EV tax credit, which would add an additional discount of $1,600 to the Chinese consumer. So this would be a combined $4,100 discount, which would likely be enough to restore demand to record-setting levels in the local Chinese market, and it would only cost Tesla $2,500 to pull that off. And because Tesla just completed their massive ramp-up of the Shanghai facility in July and August, going from about 15,000 production capacity every week to over 20,000 per week, it's likely that they've already created the additional operating leverage to maintain a comparable profit margin even after these price cuts. The same type of operating leverage is being created in Berlin and Austin as they ramp, in addition to Tesla lowering costs by removing parts and processes. And remember, in Tesla's other major market, the US, we still have an estimated order backlog of over 150,000 vehicles, and that's according to Troy Teslike. It's unclear if this backlog includes commercial fleet orders from companies like Hertz, Autonomy, and others that are still waiting to be fulfilled, but the current order backlog, combined with the fact that Q4 is historically the best quarter for automotive sales, should bode well for Tesla delivering all of their cars in the US in Q4, even without a price decrease. Then, once the clock strikes midnight on December 31st, we'll have a massive wave of demand with the new $7,500 EV tax credit for US buyers that may even allow Tesla to continue to raise prices in the US because it will still be a net decrease in price to the consumer. And if that wasn't enough, Tesla's software prowess and vertical integration has opened up a world of add-ons and incentives that Tesla can use to run promotions and generate demand whenever necessary. And I'll focus on what I consider to be the big four. Those are FSD monthly subscription, premium connectivity, Tesla insurance, and supercharging. Each of these four things could be added at the point of sale or as a short-term bonus whenever Tesla needs to generate demand during a pocket of time where demand has temporarily slowed in a given region. Imagine getting a free year of FSD or supercharging or premium connectivity as part of your purchase. Tesla just recently offered about $1,000 off Tesla insurance in China for their end of quarter push. I think the most fascinating and valuable one of these would be the free FSD monthly subscription, since it could be showcased as a $2,400 per year bonus for consumers, but would cost Tesla nothing to add on because it's a simple software update. And from a safety standpoint, Tesla has the data showing that autopilot plus a human driver makes the car almost 9 times safer than the average human driver alone, which should be a huge value add for customers. Additionally, it could serve as a Trojan horse for Tesla to get more people into its FSD beta program and expedite its data collection as it pushes towards level 5 autonomy. And they can do all of that without discounting the sticker price of their vehicle or taking away from their long-term pricing power for the FSD package once robotaxis are solved. It's much in the same way that car companies have used Sirius XM radio as a free add-on for years, only to have a lot of those buyers continue paying for that service after their free trial is up. So that covers Tesla's first and potentially most powerful demand lever, which is their ability to control pricing and incentives. Next up is the new US EV tax credit, which officially starts on January 1st, 2023. It's hard to believe that when the US EV tax credit got signed into law on August 16, 2022, Tesla stock closed at a price of $306.56. Since that time, Tesla is down over 30%, even though this law is literally a game changer for Tesla in the US market, which is already its largest market by far. And while we still don't entirely understand the full implications of this bill, especially on the battery side and other parts of the supply chain, it seems pretty clear that Tesla will be able to take advantage of the main $7,500 per vehicle credit on almost all models except for the luxury S and X. And based on recent earnings reports, we're looking at an average sale price per vehicle of about $55,981 with 30% average profit margin. We can estimate Tesla's profitability to be about $16,794 per vehicle. That means that the US government is basically handing Tesla an advantage that could increase their margin by almost 50%. Or another way to look at this is Tesla's on pace to sell 427,000 Model 3 and Model Y vehicles in the US alone for 2022. This is up from 302,000 in 2021, or an increase of 40% year over year. Even if we see a smaller 30% sales increase in 2023, that means Tesla could sell over 550,000 Model 3 and Model Y vehicles in the US for the full year, most of which would qualify for the $7,500 tax credit. That means that the US EV tax credit could add over $4.1 billion in pricing power to Tesla's 3 and Y sales just in 2022 alone. And don't forget about the Cybertruck, which is still slated to start production in the late summer next year. Any Cybertruck priced under $80,000 US will be able to take advantage of the same credit. And the best tax credit isn't for cars, but for commercial vehicles that weigh at least 14,000 pounds. So it's probably not a coincidence that Tesla just announced that their first shipments of Tesla semis will begin on December 1st, after unveiling Semi for the first time about 5 years ago. The Semi will qualify for the biggest tax credit of them all, with the possibility of maxing out the credit at $40,000 per vehicle. So all this talk about new models leads perfectly into our next demand lever for Tesla, which is their ability to launch new vehicle models and enter new geographic markets. If we really think about it, Tesla has become the behemoth that it is today by basically selling just 2 models, the 3 and the Y, and selling primarily just in 2 markets, the United States and China. And while companies like General Motors try to generate demand by creating hundreds of different models for every imaginable niche customer, Tesla focuses on category killers in just a few small segments. The 3 and the Y will eventually become the best-selling cars, not just EVs, in their respective segments. And Tesla will rinse and repeat that approach for each model it creates. The new model that I'm most excited about is the Cybertruck, which Tesla continues to reiterate will begin ramping production in the late summer of 2023. Cybertruck already has over 1 million pre-orders and will only see that backlog increase as customers and friends of customers experience the unprecedented futuristic design and utility in person. Then we have the Semi, which we just mentioned has the largest US EV tax credit of $40,000 per vehicle. In addition to that, it has an estimated fuel savings of over $200,000 in the first 3 years, making it a literal no-brainer for any transportation or logistics company. It's very likely in the near future that we will see a van and a compact introduced as well, as Elon laid out in their master plan part 2, their plan to expand their product line to address all major market segments. And both of these products have already been specifically mentioned by Elon or Tesla leadership. When it comes to new markets, Tesla has barely even tapped into some of the world's largest automotive markets. It was just this past June that Tesla finally opened up orders to 4 major markets, including Australia, Japan, New Zealand, and Singapore. You have countries like Brazil and India with massive automotive markets that have almost 0 Teslas being sold there. And even though some countries are lagging behind the EV transition, Japan, it's clear that the EV revolution is here and we have officially hit escape velocity. It's commonly accepted that when a new technology hits 5% adoption, it reaches a tipping point where the exponential S-curve takes off as the technology goes from the early adopters to the mainstream. Well, worldwide EV growth just surpassed the magic 5% milestone in 2021 and is already on pace for over 13% of all new car sales in 2022. And that's after hovering around 2% adoption for years. So countries like Japan that have massive automotive markets but have lagged behind on EV adoption will likely see EV demand take off in the coming years, with Tesla being one of the largest beneficiaries. In the next demand lever, we have the cost of vehicle ownership and the higher resale value that comes with EVs. For years, Tesla has been told that the competition is coming. But what those people fail to realize is that Tesla's real competition, at least for the next 5 to 10 years, is internal combustion engine vehicles. And the main reason that's true is because the cost to own and operate a well-made electric vehicle is so much cheaper than their ICE counterparts. And if you live in an area where you don't do much driving, this might not mean much to you. But think of all the commercial or high-use applications where having a lower cost to operate a vehicle quickly pays for itself because you're not wasting your money on gas. Nowhere is this more obvious than with the transformation that is happening in the rental car industry with companies like Hertz leading the way. Hertz has already purchased 100,000 EVs that will be delivered by the end of this year. An electric vehicle subscription service called Autonomy is adding 200 Teslas a week to their fleet and expects to have over 10,000 by the end of the year. Pepsi is expecting to get deliveries of their first 100 semis by the end of the year. Uber and Lyft drivers are switching to Teslas to save money on gas. You have entire police departments adopting Tesla vehicles, not just because of the higher performance, but because it is literally saving them and taxpayers money. The Bargersville, Indiana Police Department, which now has 10 Teslas in their fleet, said they went from about $550 per vehicle per month spent on gas to about $60 per Tesla per month. And Teslas hold their resale value better than any other car in the market. So much so that it wasn't uncommon for used Teslas with tens of thousands of miles to sell for more than a brand new Tesla earlier this year when the delivery wait times were so backed up. And so when you understand that most rental car companies like Hertz hold on to a car for 1 to 2 years, it makes it a no-brainer for them to pay the higher initial sticker price for a Tesla because they will recoup a lot of that investment on the back-end resale while benefiting from massively higher profit margins during that time that the vehicle is in the fleet. So any business or high-use individual is quickly realizing that purchasing a Tesla is a no-brainer. Tesla's fifth demand lever is its incredibly unique advertising advantage. Instead of me telling you about Tesla's advertising, let me show you what I mean.
Sir. Do you want your truck to be bulletproof or not?
Yeah, I guess I want my truck to be bulletproof.
Yeah,
sure.
exactly.
This is a Tesla Model 3. Last one of you to leave this car gets to keep it.
Oh!
We're about to take it. Oh! Woo! Yeah. Oh.
Autopilot. Tesla autopilot.
Last time you were here, you convinced me to buy a Tesla. I bought it, and it's insane.
Oh, great. Glad you like it.
Ah, man.
Pretty fun.
It's not just pretty fun. It's like, the way I've described it is it makes other cars seem stupid.
Our new EV rental fleet is the absolute GOAT.
Nice. Speaking of goats, is that Tom Brady?
Well, as you descend the escalator into the loop station, you see the Teslas waiting to whisk you into a tunnel 43 feet below ground.
SpaceX Falcon Heavy, go for launch.
10, 9,
all systems go. 3.
Sub booster ignition. 6, 5, 4, 3, 2, 1.
So live from an undisclosed location, having a great hair day, and your favorite CEO and Twitterer, Mr. Elon Musk. How you doing, pal?
Hey.
At any moment, if Tesla wanted to do paid advertising, they could. But honestly, I don't see Tesla having to pull that demand lever for many, many years to come. Their products are so viral that I think any money Tesla would spend on traditional advertising, they would rather just take that money and pass it on to the consumer as a price decrease, which would likely have an even greater effect on sales. Tesla has the world's most famous and iconic CEO who has over 100 million followers on Twitter, and he regularly gets millions of views on YouTube for routine interviews, including having one of the top watched interviews of all time, an episode he recorded with Joe Rogan that currently has over 64 million views just on YouTube alone. You have a product that's so unique and iconic that most kids who know nothing about cars know that there are cars and then there are Teslas. And whenever someone buys a new Tesla, one of the first things they do is they have their friends and family test drive it, which is why the more vehicles Tesla sells, the more vehicles Tesla sells. And then you have other companies like Hertz advertising for you by hiring the greatest quarterback of all time, Tom Brady, to be in their commercials featuring your cars. You have entire YouTube channels dedicated to Tesla and videos like this one that you're listening to right now. As you can see, Tesla gets so much free and cheap advertising from untraditional avenues that it's highly likely that they will never have to do any traditional advertising. And that brings us to our final demand lever, FSD and Robotaxis. I could stop this video right here before even touching on FSD and Robotaxis, and it would be hard to deny Tesla's demand leverage just based on the first 5 demand levers. But FSD and Robotaxis are the one thing on this list that, when fully solved, will literally make the rest of this list obsolete. Full self-driving that is capable of moving people and goods without a human driver will drive down the cost per mile to obnoxiously low levels. Currently, it's estimated that the average cost of a taxi is about $1.50 to $5 per mile driven, depending on the city you're in. Ride-sharing services like Uber and Lyft are estimated to cost about $1 to $2 per mile, although most people who have used the service, myself included, would probably tell you it costs a lot more than that based on experience. Personal driving, where you own and operate your own vehicle, is estimated to cost about 70 cents per mile when you factor in depreciation, gas, insurance, and maintenance. And when you compare that cost to an autonomous vehicle that is operating as a robotaxi, it's estimated that they can get the cost down to 25 cents per mile. That's right, a fully autonomous vehicle that is able to operate and charge on its own throughout the day could potentially cost almost a third of what it costs to own your own vehicle. And without the headache of repairs, maintenance, insurance, parking, cleaning, or storing the vehicle. So let's think about this. There is an estimated 1.4 billion cars on the road right now, and almost 8 billion people on this planet. So less than 1 car for every 5 people on this planet. If Tesla can solve full self-driving and drive the per mile cost even just under that of the average human driver, even if they can't get it down to the full 25 cents, they can literally replace every vehicle that is currently on the road today. And imagine how much bigger the auto market gets when people in less affluent countries around the world can now take a robotaxi for under 50 cents per mile, and they don't have to worry about the initial investment of owning a car, paying for insurance, or any of the other storage and maintenance issues that come with having your own vehicle. This is staggering. And the craziest part is, it doesn't need to happen for Tesla to sell every vehicle it makes for years to come. But it's the long-term call option that we all have as Tesla investors who plan to hold through 2030 and beyond. So to reiterate, despite the recent narrative that Tesla may have a demand issue, they have 6 massive demand levers that they can pull on to ensure that they sell every vehicle they produce for years to come, and do so at an industry-leading margin. The Tesla growth story has never been stronger. So that's it for today's video. This is my very first video on the channel, and this was an absolute labor of love to put together. So if you enjoyed today's video, please do me a huge favor and like and subscribe. Share this with a friend or family member or Tesla bear who needs to hear this. I would love to do more deep dives like this in the future, and your support will be the thing that keeps me going. Thank you.